What would happen if you invested $10,000 into this high yielding dividend ETF? Welcome back, guys. We're talking about ticker SPYI today. If you guys saw the recent QQQI video, same format, go check that one out. I'll link it in the description below. SPYI is another insane fund. Currently, it has a 12.01% dividend yield, which is phenomenal. If you guys don't know about the 1K dividend account challenge, that is how I found out about SPYI. I put $100 into it, and it's been paying me a pretty insane dividend so far in that challenge, and it's up, which I am pumped about. So, NEOS S&P 500 High Income ETF. We're going to cover a couple of things here. We'll go over the price appreciation, how it's been doing. We'll go into the NEOS website, look at it. They have a couple descriptions that I think are really important for people to know. Then we're going to look at the dividend history really quickly. I've done this before in a different video, so I'm just going to do that very quickly for you. And then we're going to jump into how much money you would make investing 10K into this, which is insane. Now, before we get started on that, I want to say this is not financial advice, and investing 10K into anything is high risk, especially a fund that is relatively new. So as always, do your own research, make your own decisions, and I hope you win big. So let's go ahead and look at the price appreciation. Now, this fund started in October of 2023. So actually a little bit before, April of 2023. So we're almost to a full year. And it did have a span where it dropped pretty heavily, down 10%, but even down 11% is not that bad, to be honest. It's still up 5% on the year, which I think is great. And I'm glad that it has a full year under its belt now of those insane dividends. So SPYI, let's jump into the NEOS website and take a look. Looking at all the data from NEOS. So NEOS is the company. They have SPYI, QQQI, and CTSH or something like that. One more quirky fund that's for T-bills, I believe. But let's take a look at their strategy. You always want to look at the website, see how they are portraying themselves, the fund, see if it's realistic what they're trying to do. The expense ratio is higher for this. That's important to note. That would cut into your total net profit. It does pay monthly, which I love. So what they do is they want to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven call option strategy. So if you're not familiar with options, there's a lot of money to be made in options. It is a little bit higher risk, but calls and cash secured puts are some of the safest ways to make money with options. Now, you can still lose money theoretically if you have to pay for all of the stocks that you had in your call, or vice versa with your puts. You may lose money on the trading, but if you do it well, it's a great way to make some money. I'm investigating some options trades right now. I'm getting into it, and calls and puts are all I'm doing. I'm not getting anything anyway crazy in that. And so this is an actively managed fund, which is why the expense ratio is 0.7%. That is quite a bit. And the fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing SPX index options classified as Section 1256 contracts that are subject to lower 60/40 tax rates. So this is really important. This is why I think these funds could do really well when you compare them to QYLD, XYLD, RYLD, NUSI, JEPI, JEPQ. JEPQ is also in the 1K dividend account and has been performing well. I'll give it that. I do like the JP Morgan funds, but you're taxed really heavily on these dividends because they are short-term income. And so the way SPYI and QQQI are doing this is it basically is, it's very complicated, and I am in no way, shape, or form an expert on taxes, but you pay less taxes on the income by how they do it with their tax loss harvesting. So it is really an interesting concept. I'm surprised no one has done it before, because even with the little bit that I know about it, it makes a lot of sense. And next, the fund utilizes a call option strategy that may include both sold and purchase SPX index options, which may provide the opportunity for upside capture in rising equity markets. Same thing as QQQI. I spoke about this. The beauty with these is, unlike JEPI and JEPQ, is this fund, if the market is going up, you'll still recoup some of that money on it going up, even though you're not yourself holding these individual stocks. Whereas the other funds, same thing with a lot of these funds, honestly, they trade relatively sideways or sideways and down, which I know there's a huge fan base that loves QYLD, and I understand that. I owned it for a little bit. I did sell it. You can check that out in my last video that I'll link at the end of the video. Because although it was yielding over 10%, you're losing money on taxes because you're getting taxed on the short-term gains from those dividends. So it's 10%, but Taxes, depending on how much money you make, could be 1%, maybe a little more. And then you're also losing money on the overall price appreciation of QYLD. And maybe it's been doing better recently. I haven't looked at it since I sold it early this year, but I was down about 17% and I was reinvesting. So I just continued to lose money. So if you're going to reinvest the dividends, and maybe that's the mistake, is you're not supposed to reinvest your dividends on those kind of funds, but SPYI and QQQI have been trading upward. And now this is a time of the market where things are going up. JEPI is up, JEPQ is up. So that may be part of the reason. It's just a better time in the market than what we've been looking at. But still, with the tax loss, you're still getting a better deal, in my opinion. So now we're going to look at the really, really important investment objective of the fund. NEOS S&P 500 High Income ETF seeks monthly high income in a tax-efficient manner with the potential for upside appreciation in rising markets. You don't want to miss out on bull markets. That's a really key thing. You don't want to, so I like that these funds incorporate that. Let's take a really quick look at their dividend history. So it's really not much to show. We only have really 1 year of dividends. They've ranged from 46 cents up to a little over 50 cents at one point. No, 50 is the high. So we'll scroll down and see they do pay monthly. Oh, this has them paying for quite a bit longer. So monthly, they've been paying since September of 2022. Not bad at all. Regular dividends. What I like about this so far is the dividend. I don't care if the dividend grows. To be honest, with these funds, I don't expect the dividend to grow. I want it to be consistent. And what I had issues with QILD and with JEPI is some months you get 30 cents and some months you get 70 cents, which if you're relying on this for monthly income, I don't really want it to be variable. I want a consistent amount of money throughout the year. And so I think these funds, if they can keep up this consistency, could outperform those funds just because. And that's tough to say because JEPI is a huge fund. I mean, behind a few others, it was some of the most popular ETF over the last couple of years, behind SCHD. So dividends look pretty decent. Again, you need a little bit more history in my opinion, but they've been doing well. So I'm genuinely curious to see how it does in the next year. Let's jump into the calculation. Okay, so we're on dividend.com. We are using their dividend calculator. We have $10,000 invested at a rate of 12.01% for 1 year. Simple mental math tells you you're going to end with $12,001, which is beautiful. Your total money after that year is $11,201, and that is key. You were reinvesting these dividends, guys. That's where you make your money. That's where your compounding happens. Beautiful. 5 years. In 5 years, at that fifth year in dividends, you will make $1,890.47. Your total return in 5 years on $10,000 invested, $7,631.29, which is insane. Total, you're almost to $20,000 now. So you've made a 76% return in 5 years. And this again is not price appreciation. So if it does go down, this would of course be less, and you're losing 0.7% to taxes, but not taxes, to management fees. We go to 10 years. This is where it really starts getting insane. So now, just this year, in 1 year, you will make $3,333.14. Your total return, $21,000. Just insane. I'm speechless. So your total money now is $31,086. It's hard to read these numbers. They need commas in here. Maybe I'm just half blind. I have my glasses on too. So anyways, jumping up to 20 years. So now we are making a third of our initial investment every single year. You're making a third. So in 3 years, you have recouped your initial investment. Whew. Now every year, after 20 years. Now 20 years is a long amount of time. Very long. But in 20 years, you are now making $10,361 every single year just from the dividends. Your total money is $96,000. So you have turned $10,000 into $96,000, a near 10x return. Your total dividends are $86,000 in dividends in 20 years. And let's say you want to retire. Let's say you're 20, or you're 25, you want to retire at 55. Let's do 30 years. You now make $32,000 every single year just in dividends. The total amount of money you've made in dividends, $290,000. And your total account balance after your 10K initial investment, $300,000 and 402. So you are well over $300,000 in 30 years. An absolute insane return. If you want to start pulling out these dividends, I don't know about you guys, but, well, $32,000 a year really isn't enough to live off of. And it probably won't be in 30 years. But let's say you invest $30,000 and this number triples and you can live off $90,000. Again, it's just absolutely insane the amount of money that you can make. Now you actually have $300,000 from a $10,000 investment. So it's just insane. And before I just leave, let's say you just put $10 in. After 30 years, your $10, you'd be making $32 in dividends. Your total a year, your total return on dividends is $290, and you have $300 in your account. A pretty insane return. So that just goes to show you the power of compounding, the power of these dividends and what you can do. Now, again, I'm going to reiterate, this is a really risky pick. I do own this one, so I am biased. I like it a lot. It's been performing well for me. I own it in 2 accounts. It's been performing well, like I said, but it is higher risk. This is a newer company. It's a newer fund. Do your own research, make your own decisions, and let me know what you think in the comments down below. I hope you guys enjoyed the video and found something useful. Check out the other videos linked at the end of the video, and I will see you guys. How many times can I say video in like 5 seconds? Wow.